Hi, welcome back to this course on IFRS 15. In the previous video, we have briefly discussed the five-step model which is prescribed by the IFRS 15. So before we go further into the details of each step, let us look at a very simple example of how this step can be applied and what will be the impacts of this five-step model. So what happens now at the moment if we are selling we are there are usually components which are being sold as a combined package. So you are selling equipment, you are selling the installation fee, you are selling the post sale rights, post sale services, and sometimes you are selling the material rights. But let's even if we don't take the material rights, but usually the equipments comes with the installation and the post sale service. For example, warranty for 3 years, warranty for 2 years, guarantee for 2 years, sometime lease back option after a certain period of time, and they comes free of cost. I mean, they are advertised free of cost. They in the and if the price is quoted as one contract price. So in this example, this company, let's say they are selling this equipment for 40,000 currency, right? Currency dollars, whatever currency you can assume. So in that case, they are saying that okay, we do the freebie installation, we do the free post-sale service, we do the material rights, and the accounting usually is done based on the sales price. The whole 40,000 is recognized as the sales price when we are delivering, and the installation cost the cost itself is charged to the profit and loss statement. So you don't really get separate cost for installation and the equipment itself, and you don't know which one is profitable. This is an example. Some companies may be combining other goods and services together, which may be a significant part of their business. For example, hotels, where they are combining the food with the room stay or with the spa, which is significantly separate part of their business, and usually is helpful to understand the profitability and operating efficiency of the hotels. Now, post-sale service, since sometimes you are actually uh, doing the postal service for more than 1 year. However, the entire revenue is recognized in the first year itself, and the cost which is coming from the postal service is recognized over a period of time whenever you are incurring the cost in doing the postal service. So that's what typically happens now. So there is a mismatch between the cost and the revenue, even though you may be saying that the companies might have to do the contingent liability or the provisions for post-sale services based on their previous standards. So in some sense, the revenue and the cost might be matching, but that's not entirely right, because you are not recognizing revenue separately and showing the cost separately, so that the users of the financial statements are able to understand which what is the correct segmentation of revenue. So nowadays is getting more and more important, because companies are diversifying themselves into the different products, different services, different ways of generating the revenue. So it's important to understand them separately, understand their profitability separately, so that the users can make a right decision. So how it will affect the coming the five-step model? Let's look at now what will happen when you have to apply the five-step model, right? So the first step, basically, you will identify is the contract. So is there any contract with the customer? Usually the contract is just a tip of the just a written contract, so means you can definitely say yes, there is a contract. So the first step is identified. Now the second step, which is identifying the performance obligation. So here, obviously, if let's say the company is selling the equipment along with the installation all the time, so they are not doing installation separately, so that's one performance, so that will be considered as one performance obligation. We will be discussing more about these identifying performance obligations in the coming videos, but on the surface it looks like the company has four components of their performance obligation: equipment, installation, post sale service, and the material rights. Now If let's say the company has traditionally been selling, company is able to do the installation separately, then it means uh, the or the training separately, which means that's a separate stream of business, and it may have a price, and their revenue need to be identified separately, right? So that's how the, or there are other competing sides. So there are various considerations that we will look into the future videos. So here the first complication if of IFRS 15 arise is identifying the performance obligations. Now the third step was the transaction price. The transaction price here is clear. You are charging $40,000 for the contract for the whole thing. That is clear enough. But the fourth step, allocating the transaction price into the performance obligations, is where the another complication of IFRS 15 comes in, which says how you are going to allocate. So the prices that you see on the screen are standalone prices of, let's say, they are already allocated prices of the total price into different service. How we are going to allocate that, we will be looking at in our future videos. Then the last thing that you have to understand in the IFRS 15 is recognizing revenue as and when the performance is obligation. So when it is delivered, when it is performed. So equipment will be when equipment will be should we recognize the revenue when equipment is actually delivered? Should we recognize the installation revenue when it is actually performed? Or when or we have been on the site, or when it is complete, or during a period of time, or at one point of time, the post sale service when we are going to perform. So how we identify this 4,800 immediately or over a period of time. So those things we will be looking at in the fifth step. So this is the entire signature of the 5-step model, which we are going to look at now in the future things. So here again, the questions that are arising in the coming videos are summarized here. So we will be looking at these in the more details when we are discussing them one by one. So stay tuned.